Hello, I'm Callum and this is my co-host Cheryl.
And this is the How's the Market podcast where we talk all things property.
Each episode we cover a different section of the industry to keep you up to date with the latest news and the latest market trends.
Now, I'm sure you all know that there has been a lot of talk about mortgages and interest rates over the last 12 months. So today we've invited Anthony Fylnn to talk all things mortgages. Anthony is the owner and founder of Fylnn Mortgage and Protection. We wanted to get you in today, Anthony, because you know a lot more about us, the mortgages. So we wanted to see what's been going on and put out an episode for our growing audience to cover the last 12 months of mortgages particularly. Okay. I've spoken to you a little bit off camera there. Sounds very busy this January. Do you want to let us know what's been going on so far this January?
Yeah, so it's no secret the last couple of years, property side of things and mortgages have been a little bit topsy-turvy to say the least. So January has been the busiest January that we've had so far in the past 5 years since we were founded in June 2019. So we'll be 5 years old June this year. But yeah, the start of the year is showing some very promising signs.
Why do you think that is?
A multitude of different things really. So I think based on what's happened over the past 12 months specifically, there's been a lot of doom and gloom in the papers. We had a kind of the worst of both worlds whereby rates were really high and house prices were still really high from what had happened over the COVID period. So we had rates that were 6-7%. We had house prices that had been the highest that they'd been for a very long time. And I think a lot of people were kind of, let's give it this year, kind of write this year off, keep saving up for a deposit and we'll kind of look in the new year, which is now. So I think what we found is in January this year that there's a lot of people that were holding off that now have decided, look, these things aren't going away anytime soon, so we'll buy now.
Yeah.
Plus the people that were going to buy anyway.
Yeah, definitely. I'd say so I found with buyers that in Q4 last year were very, very scarce. And it's interesting you say that because I think buyers still are scarce at the moment. I think a lot of people thought New Year rates are going to go to the floor, which obviously hasn't been the case from what we've seen. So yeah, interesting you say that. Is it first-time buyers that you're seeing coming to the market or is it, people that are selling and buying?
Yeah, I mean, to be fair, mate, our demographic, there's no secret in saying that our biggest demographic is first-time buyers.
Definitely.
I think I'm of the generation that appeals to sort of first-time buyers. Yeah. So that's not to say I don't deal with sort of home movers and landlords and all that kind of stuff. But if you were to look at the vast majority of people we deal with, it is sort of the people that are buying the first homes. I think it came out not too long ago, the average first-time buyer in the UK is mid-30s.
Yeah.
So when you look at it that way, the vast majority of people that I tend to deal with are in that position, really.
Mm-hmm. Definitely. So obviously the biggest direct it's having on people's life at the moment is their mortgage payments each month is increasing. Roughly, have you got sort of a case study that you can think off the top of your head of how much you're seeing them go up? Yeah,
it's hard to say with that. One thing to bear in mind is, of course, we've been going since June 2019.
Yeah. So
when I first started, the vast majority of people I was seeing were getting rates of 2.5%. So obviously my advice was to put them on a 5-year fixed.
Definitely.
So I've not had them people back in just yet. They'll be due in this year and next year. That's not to say I've not had people come to me that had been seen by other people before Fylnn and Co was a thing. I've had one person that's mortgage payments went up by 400-500 quid, which wasn't great. But in saying that, most people use brokers nowadays. Not many people do direct applications with banks. So it's a job of a broker to make sure that if rates were to go up, you would be in a position that you could still afford it.
Yeah.
So when we speak to clients, it's not a case of going, right, you can afford the payments now, let's buy the house. It's you can afford the payments now and there's a bit of a buffer.
Yeah.
So that if you come out of your fixed rate in 2, 3, 5 years, you'd still be okay.
Yeah.
So that's why I don't think it's had as big of an impact as you'd think. Yeah. It's not been that bad. Yeah. But that's just speaking from my experience. There may be people out in different parts of the UK where house prices are a bit bigger than what they are in our area, the Northwest. But
I suppose if you're looking after your clients beforehand, so like you say, you've got that buffer, so you know that when they come back to you in 5 years, they're going to be able to remortgage or whatever they need to do within that time, knowing that you've prepared them for that at the beginning.
Well, my conscience is clear. Because when I had first-time buyers in, and a lot of first-time buyers who have done mortgage for can vouch for this, one of the first things we do is a budget planner. So we pretend they've bought the house. So we go, right, your mortgage is going to be 800 quid a month. council tax 160, gas, water, electric 200, food £400 a month. And we literally work out what the bill's going to be over the monthly period. And we want to have a bit of a buffer at the end because unexpected things can happen. Rates could go up, the boiler could go, the car might break down. But most importantly, you want to make sure that you can go on holiday every year.
Yeah, that's the main thing, isn't it?
Yeah, definitely. I mean, obviously, we're talking about percentages here. And sort of the question now that moving to there, if that mortgage payment does go up 3%, that could be £250, £300 a month, which people don't really think of that. And you've just touched on something that sort of resonates with me as well in sort of my business is I'm always feeling like I'm educating people.
Yeah.
Because buyers go unrepresented in our country, unlike America, Australia, Dubai, it's sometimes almost frightening that people are buying the biggest asset they're going to ever buy in their life and they're going into it so uneducated. So you spend most of your time educating people on what they're actually taking on.
100%. Like you said, it's going to getting a house will probably be the biggest one of, if not the biggest investment you'll ever make in your life. You're going to be borrowing hundreds of thousands of pounds. So why would you go in on your own? The beauty of a broker is the fact that most of the advice you get in the beginning with is completely free of charge. Clients come in and see me and they sit with me for an hour, 2 hours, 3 hours, and they don't pay me a penny for it. They could leave and never come back. There's no obligation to come back. But they walk away with the knowledge that what they're about to do is the right thing for them, is not going to put them in a position where they're going to come in on a Friday and not be able to turn the lights on. They can't afford to. So it's very important that you could go on any sort of calculator in the world on Google or whatever, and it'll give you your maximum budget.
Yeah, I think a lot of people see that, don't they? And that's 100%. What they work off. I've been in with you myself, going through affordability, and I think there was so many things before coming to meet you that I didn't think of. Which, because obviously you're so, committed to the service that you give, you add them extras in so people make sure that you are thinking, have you got money for this? Have you got money for that? What if your car payment goes up? What about you do this? So credit to you on that one.
What rates are you actually seeing at the minute, Ant?
Depends on the loan to value. So the smallest deposit you can put down is 5%. There are some very few 0% deals, but they come with a lot of stipulations. So to get access to the normal product range, you're going to want a 5% deposit. A 5% deposit now, depending on whether you do a 2 or a 5 year fixed, depends on the lender. So if you look at the highest it can be, that'll be a 2 year fixed. Your rates are anywhere between 4.5% and 5.5%, maybe up to 6%. Yeah, probably close to 6% on a 2 year. 5 year fixed, take 0.5% off that.
And that's for, say, anyone in their own name buying their own house, the main residence. In terms of, say, landlords then, looking at landlords of buy-to-let properties, what are you kind of seeing in that?
Pretty similar. It's pretty similar, to be honest. So obviously you're going to need 25% deposit with most lenders for a buy-to-let. So 2 year fixed, again, 4.5% to 5.5% potentially. 5 year fixed, 5.5% to 6% maybe. It all comes down to lots of different factors. And I suppose the important thing to remember when it comes to rates aren't the be all and end all. What's important is the total cost of that mortgage to you. So I could get you a rate of 3.9 with certain lenders right now, but they may charge you $2,500 to get it. They may charge you for a survey and a product fee. There's loads of different things that make that a more expensive deal than the one that's 4.2% but has no fees. So I try not to get too caught up on rates with my clients because it's not a true cost. It doesn't give you an idea of the true cost of the product. It's more a case of you want to find out how much that deal's going to cost you over your fixed rate period, including all the fees. So best rate doesn't mean cheapest a lot of the time.
Yeah, can we just touch on them fees? Because that was something I'd seen this week where someone done a bit of a case study and they were looking at the cheapest rate. But because the arrangement fees were so high, they looked at another product with a higher interest rate, but it worked out £500 cheaper throughout the year.
So the thing is with rates, most banks will be quite similar, especially high street banks. They're all going to be roughly close. So the way they incentivize you is by offering add-ons. So that could be, we'll give you a free basic mortgage valuation survey, typically about £300. They will do that for you free of charge. Instead of charging you a $999 product fee, they'll pay that for you, or they won't charge you it. And then even still, I've done a deal yesterday, a 5% deposit, no fees, £1,000 cash back. So if you've got someone that doesn't have a lot of money alongside their deposit, they may be happy to pay an extra 30, 40 quid a month. If it means they're not paying the survey fee, they're not paying a product fee, and they're getting £1,000 towards all the legal bills. So mortgages get this sort of reputation. It's like a kind of a one size fits all. Everyone does a fixed rate. Everyone does a
Definitely not.
It's not like that. It's about finding what's right for you. So you may be someone that wants the cheapest monthly payments.
Yeah.
You may be someone that wants or doesn't mind paying a little bit more each month, but wants to make it as cheap as possible to begin with. So no fees, bit of cash back. So that's why it's very important to see the whole market and go from there, really.
Can I just ask, so obviously I'm a letting agent, so mine is all around landlords. People who buy in limited companies, do you deal a lot with them? What are you finding is going on with that at the moment?
Yeah, buy-to-let's been so hard the last 12 months.
Yeah.
It's because the rates shot up back end of 2022. When it comes to buy, I don't want to get too technical, but with buy-to-let, you get something called a stress rate. So the rent has to cover the mortgage payment if the mortgage payment went to a certain rate. Okay?
Yep.
Now, when the rate shot up to 6-7%, the rents didn't shoot up. People's rental payments didn't shoot up by that amount.
Yeah, by that much.
Exactly. So what we had was a lot of landlords that were trying to remortgage, but because the rent was still based on what the mortgage was before the interest rate hike, we couldn't get it past stress rates. So it was difficult. Limited companies, we do a few. We find that when people do limited companies, it's more portfolio landlords.
Yeah.
So people with 4 or 5 properties plus because of the tax benefits of it.
Yeah.
The issue with limited companies, they tend to come with higher upfront fees, and they also tend to be a bit more expensive on the legal side. So you need to probably speak to an accountant when it comes to doing limited companies, whether it's going to benefit
definitely.
you from that side of things.
Yeah.
But rates are a little bit more than what it would be if it was in a personal name.
Yeah.
And the fees are a bit more.
Yeah.
Yeah, it's more of a tax advantage, isn't it, really?
Yeah.
It all comes down to the tax, why people would
Yeah.
do it. Yeah, people don't just do it for the sake of it. It's more for the case of if you do it in a personal name, it
Yeah,
goes
we've
on to
seen
your
like
own
obviously
income.
landlords paying more tax than we the other year. And then obviously to follow on that, the rates have gone up.
Yep.
So I think, we touched on it before, the landlords are getting such a bad rep. At the moment, you've constantly got people going about landlords putting them up, but they can't just carry the costs constantly.
I want to touch on that. Yeah.
Like when I've worked out looking at properties and working out what a mortgage would realistically cost on that, it's not too far off what the rental payment would be every month.
I think there's this misconception, and I'll be honest, I probably had it when I was a bit younger, that landlords were these people that were multimillionaires, Ferrari on the drive, and they were these people that were kind of rinsing you. I can say from experience now, after having dealt with hundreds of landlords, 99% of them are your average Joe.
Yeah.
Average salary. Don't have big glamorous holidays with a big glamorous car.
Yeah,
They
inherited the property and rented it out.
exactly. Well, a lot of people they would have bought the first house, lived there 15 years, and instead of selling it, rented it out.
Rented it out, yeah.
Some people, instead of paying for a nice holiday every year, they'll put the money away, and after 5 or 6 years, they'll get themselves a buy-to-let.
I think a lot of the time as well, people want to, our generation, pensions aren't always, a lot of us don't all have pensions. So it's
100%.
something that we've, as a generation, I think, have gone, right, we'll invest in property.
Yeah.
That will pay for our pension when we're older. It's something to sell and get the money from us when we're older.
Well, something we do a lot at the moment is let to buy.
Yeah.
So you may have been living in your house for an amount of time whereby you've actually paid off quite a bit of the loan, so you've got a bit of equity there. And rather than selling, what you could then potentially do is pull some money out of that property, which then acts as a deposit on your next house. But then it also means that you can keep your house and rent it out. So that's another way to get into having sort of buy-to-lets. And I'm not saying every landlord's perfect, of course they're not. But I do think there is this kind
My
of...
landlords are.
Of course they are.
They are.
Yeah, exactly. But I think there's just this idea that every landlord's this horrible person.
Yeah.
And when you look at it they probably charge you £800 a month for rent, let's say. But 60% of that's probably going out back to the mortgage.
Yeah.
Then they've got to pay for all the maintenance. Then they've got to pay tax on the profit. They've got to pay for potentially someone like yourself to manage the property.
Void periods, maintenance.
Everything. Yeah, so they're not all running down to the bank laughing, trust me.
My landlords are brilliant. And I'm not just saying that just because they potentially might be watching.
How much did they pay for this?
But they are, just give us a shout out. Yeah, no, they are. And a lot of the time they want to look after they do want to look after the tenants, and that's their asset at the end of the day. They want to keep that in good order because at the end of the day they're going to eventually sell that on, and they want that as to make them a little bit of money. They're not in the property game as a charity and to not make money. No. The whole reason to do it is a business at the end of the day. And I think as long as that's what we try and say to our tenants, kind of obviously when rents increasing and all things like that, tenants are like, the landlords, making, like you say, making money off me. They think that they're driving around in Range Rovers and all that sort of stuff. Case. And they're not. They just basically want these properties to take, when they're older, to sell on, to pass on to the kids or whatever it is. And they're looking to just keep them in good order and look after the tenants now.
Yeah, definitely. I think we just touched on voids now. For me, if I was a landlord, that would be my scariest thing because of that profit margin we talked about just then. 2 months voids could be you not making any money from that property for the whole year.
It's not like these are, like we say, the cash rich and they can afford to pay the mortgage. They are relying on the rent to pay for that.
Often they're not cash rich.
Most of these people work full time.
Yeah.
They're just your average person, 25 to 40 grand a year salaries. They're not people that are just sat on lumps of cash and just can afford to not let you pay for 6 months. It doesn't work that way.
But even still, we've got landlords who are in that position, that exact sort of person. And if a tenant was struggling and was in trouble, they would say, spread that payment out over
100%.
6 months. They would, because, they want to look after the tenants and the property. So even though they're not in a position where they are cash rich, they would then have to cover the mortgage payments.
Yeah, definitely.
So,
yeah, but it is really a relationship though between a tenant and a landlord.
Yes, absolutely,
I've seen it so much, especially during COVID, and the cost of living crisis become more of a thing. Then that is happening a lot more.
Yeah.
There was a really weird little period where when the rates shot up, it was actually cheaper to rent than it was to buy.
Yeah.
And that was a really weird time. It only lasted a couple of months, don't get me wrong. But it was odd.
back.
It was odd.
I was taking on listings that would suit first time buyers. I'm like, there's no first time buyers. And then obviously the 100% mortgages come out. You're like, they might come, but with what they were getting offered, it was still like.
What did you think of the 100% mortgages?
Can I say it was a bit of a marketing scheme?
I think that.
You're not hearing about them anymore.
No, to be fair, like, don't get me wrong, we had loads of inquiries. Like, my phone was a hard day.
Imagine.
It was a really hard day.
I remember your stories at that time.
Yeah, I've probably done about 45 calls in one day. So, there was a particular high street bank that brought out a 0% mortgage. The issue with it was there were some stipulations. The biggest issue with it was that the mortgage payments couldn't be more than the rent you were paying. So obviously rents hadn't jumped up by that point.
Yeah.
So people were paying, let's say, $650 on a 2 up, 2
property
down.
prices were still up.
Yeah. So, but $650 on a 7% mortgage meant people were going from these houses where they lived with the kids. They needed 3 beds and a driveway or a garden, whatever. All of a sudden, they would have to go back to living in an apartment or a 2 up, 2 down with no garden. Downsizing. So it just wasn't appealing to anyone. So I can honestly say since that came out, I think I've done one.
Okay.
Yeah. Is that product still available or not?
Yeah, it's still there. It's just
See, I thought it'd come off.
Yeah, it only gives you the one option. I mean, there are other banks. Barclays do like a springboard mortgage thing where like a family member puts your deposit into a savings account and they get it back after a certain amount of years. So there are other options, but there's no competition, so they can kind of charge you what they want.
Whatever they want, yeah.
Yeah, so if you can get to your 5%, instantly you then have multiple options.
Yeah.
And when there's multiple options, there's competition, and that's when you start getting your incentives, no fees, cash back, that kind of stuff.
Yeah, so you don't think the 99% mortgage that was talked about last week will come up? Because obviously only a rumour at this point, isn't it?
It's only a rumour. Listen, anything that helps people get on the housing ladder is a good thing. But all good things come with consequences.
Yeah.
So you just got to be careful. You just got to see what happens with it, basically.
I love it when cheap lending comes about because everyone starts looking at houses, and if you're looking at buying a house, you need to sell a house. Yeah. And that's when I get my phone up. So it always suits me. I mean, we've touched quite heavily there on landlords. You want to slightly go back to homeowners?
Sorry, took the conversation.
Yeah, definitely there to cover. But I want to go more back to that initial appointment because like I've touched on sort of the service you offer and stuff. You're probably like to me where you get a lot of the phone calls by not time wasters, but people that aren't quite ready and haven't got that knowledge and stuff. So what would you say really would be the 3 things that people either need to get in order or think about before coming and seeing you?
Good point. Good question. First thing I say to everyone is it's never too early to go and see a mortgage broker.
Yeah.
I have people that message me and they say, look, we're 2-3 years away. I don't want to waste your time, but we need a bit of advice. And it's like, look, whether you're 5 years away, 5 months away, it doesn't matter. Get in, because if you're not quite ready now, it means we can put a plan in place. So in terms of tips for people that don't want to kind of commit to coming to see somebody, understand your credit file. The amount of people that don't actually know what's on the credit file is unbelievable. Trust me.
We're like that in lettings where we'll speak to tenants and say, you got any CCJs? And they go, no, nothing, no. And then it'll come back and they have, and we're like, oh.
It's funny though, because they might actually No. So I've had a couple of cases literally this week where there's been stuff on the credit files that they didn't know about because they had been linked to somebody else. So I've had a twin whose other twin was also on their credit file. Same surname, same date of birth, same address. So their credit files have been merged.
Oh, really?
Yeah. So any twins out there, check your credit file.
Especially if you've got a bad twin.
100%. So check your credit. And then I've had another one where the dad's credit file was on the son's.
Oh, really?
Similar name.
Same surname. So same first and last name. Obviously different date of birth, but same address. And they'd been merged. So, but that's like very odd examples. But people come in and don't understand because they may have moved address. They may not have realised something was going on there. One that we get quite a lot of is parking tickets. You see, this is a funny one, this, because you see people put on Facebook community pages about a parking ticket and you always get that one person, don't pay it. They'll stop chasing you at a certain point. Just leave it.
Yeah.
They don't leave you alone.
No, just pass it over to the solicitor and then theirs to deal
My
with.
friend's got a CCJ from that.
Yeah.
She put it all over Facebook and said, should I pay this? I've been told that you shouldn't pay it to a private company. And everyone put back,
only pay the police or the council as well.
Police or the council, And everyone put back, no, don't pay it, it's fine, just leave it. And then it came back. She was applying for a mortgage because she's got some buy-to-let.
People get caught.
She was applying for a mortgage and it came back that she had a CCJ, and when we looked into it, it was this. And I was just like, oh, God.
The amount of people who come into my office that have a parking ticket CCJ, you would not believe.
Yeah.
Because some random fella on Facebook said, as long as it's the police or the council, don't pay it.
I think it's one of them. If it's the news that you want to hear, you take it.
You just do it,
That's
Someone's going to tell you what you
You'll have seen it yourself. I had people in. My mate down the pub said this.
Yeah.
Right, what qualifications did your mate got?
So note to everybody, always pay your parking fines
100%.
and your speed tickets.
Yeah, definitely. And I mean, that's the whole reason of the podcast, because you have so many people in your place of work or down a pub going, no, I've seen this mortgage, or this is what house prices are doing at the moment.
That's
the whole reason for us now.
Tip one, understand your credit file. There's some really good websites out there. I personally use Check My File.
Yeah.
The reason I use that one is because it shows you Experian, TransUnion and Equifax all in the same place. Which is what you want to see. You want to see all three, because you might find that someone has reported to one agency and not the other. Whereas at least with that website, you see all three in the same place. I believe you get 30 days free to check it, and then you pay after that. Obviously, go on the website. It'll tell you more about how all that works. That's tip one. Tip two, understand how much you earn. Everyone knows how much they get paid after tax and their national insurance, but no one knows what the salaries are. So a lot of people come into our office and go, well, I get 1,500 quid a month. Okay, but what do you get before tax and national insurance? And understand the breakdown. What's your basic salary? What's your bonus, commission, overtime, car allowances, or shift allowances? So you need to break it down. So the way it works with lenders is they'll all take your basic salary, but then if you get commission, bonus, overtime, that kind of stuff, certain lenders will take certain percentages. So some will take 50%, some will take 100%. And that's why it's good to speak to a broker, because we can put you with the lenders that take 100%.
Yeah.
Some lenders take child benefit, some take universal credit, some lenders take 100% benefit income. So if you are, let's say you are on personal independence payments, some sort of disability, and you don't work, we can use that. You can still get a mortgage if you're not working. Yeah. So understand your income. And then number three, what would be the best tip for that? I'd say do a budget planner. Sit down, go through your bank statements. You can get templates for these online. Yeah. I've got templates I can send to people if they need them. And actually sit down, look at your income. How much at the end of each month do you have left over? Being realistic.
Yeah.
After you pay for your car and going out with your mates and a takeaway and all that kind of stuff, how much is left over? And then work out what your mortgage payments would be. Can you afford to have a house and still actually afford to enjoy the life that you want? Yeah. Because like we said before, it's all well and good buying a house, top end of your budget. But if you've got to wait 5 years to save for a holiday, no one wants that, do they?
Quality of life's gone.
That's it. So you better buy for a bit cheaper, find that sort of happy place whereby you can afford to have a house that you want. You might have to compromise a little bit, but if it keeps the quality of life high, then it's more important.
Yeah. There's no point in buying a big gorgeous house and sitting in it and not being able to do anything or go anywhere.
Gorgeous it is.
Can't decorate
got 5 acres then I'll be all right.
Yeah. I see it. I see it so much, especially in sort of the higher end areas that I work in, where you've seen what their affordability is from the mortgage advisor, and they've used the absolute max of it.
So they're like asset rich. People are asset rich, but they don't have a lot of cash flow. So like you say, we're living in a house, £1 million, but a lot of them don't have that disposable income left over at the end of each month. And that's not a position. I mean, it's nice having a £1 million.
You've definitely got to find a balance, haven't you?
Yeah. It's one of them.
Yeah. So I just want to touch on, you mentioned affordability there. I just want to touch on it standard because I always think I know how to work out affordability, but I probably don't.
Yeah, there's a cheat code for that.
Yeah. So I always go off annual salary times 4.5. Am I right or wrong? Place
to start. Yeah. So yes.
Go ballpark.
No. Yeah. So let's take your average 30k salary.
Yeah.
If you had no debt at all, and when I say debt, I mean loans, finance, credit cards, store cards. If you had none of that, you can get from most banks roughly 4.5 times your salary.
Yeah.
It's a good starting point. It's not exact. It's not exact science because some lenders offer 4.75, some offer 5, some offer 3.5. But it's a good ballpark to start.
Yeah, someone asked me the other day, and that's 3, and I was like, definitely not 3.
Yeah, well, no, I know there was a lender I know that was 3.5, but most are 4.5. So that's the kind of the rule of thumb we start off with. But then one thing you need to consider is, let's say your car is £200 a month. You need to annualise that monthly payment, so £2,400 a year. Times that by 4.5 and deduct that from what your 30,000 times 4.5 was. Does that make sense?
Yeah.
I haven't quite followed, but I'll go with it.
So you get 50 grand salary times 4.5, whatever that is.
Yeah.
Whatever your annualised car payment is, times 4.5, deduct it from that.
Okay, yeah.
And that gives you your new maximum loan.
There's a lot of maths going on here.
No, but I'm following, and that's
Are
how
you there?
that's
Yeah,
how
you
to
got
work
it.
it out.
Yeah. So whoever's got, just basically annualise it, times it by 4.5, and then with credit cards, you take roughly 3% of the balance. So a £1,000 credit card would be £30 a month. Times that by 4.5, gives you your annual amount, deduct that from your max loan.
Great.
Mortgages are so dreadful.
Yeah, that's why we don't do mortgages.
It's not an exact science because, like I say, there are lenders that'll offer a bit more.
Yeah.
There are some that'll do 5.5, but it gives you a good ballpark.
No, definitely. But because I've sat there and spoke with you before and knowing a little bit, being in sort of the industry myself, I just think, right, before I apply, settle all debt. It just makes it so easier and get rid of any finances, stuff like that.
Some debt can be okay. And some debt can be a good thing. So I have people coming in that have zero debt, which can cause a little issue because you've never proven your ability to repay debt.
That's different. Like I've had credit cards and stuff in the past, but I'd rather just have the balance settled.
But then that gives you your max affordability. Then that means you can afford them. That gives you your maximum loan then. But it's good to have had something that builds your credit file up.
Yeah, definitely. So we've covered quite a lot there on mortgages and buy-to-let mortgages as well. I noticed in your company last year that you'd start with commercial finance as well. So we'll just brush quickly across that. Who is commercial finance for, really?
Yeah. Just a disclaimer on that. I've opened Fylnn & Co commercial mortgages, but I have brought someone in that's specialised in that area and qualified. So I don't want to offend any commercial brokers out there that I might offend by saying something wrong because I'm not doing the commercial myself personally. But the reason I've done it was I've seen a gap in the market. So when I say a gap, I mean I felt like a lot of landlords were sort of gravitating more towards that.
Yeah, we definitely agree with that, wouldn't we?
So I thought, well, maybe there's something there. So who's it good for? It can be your portfolio landlords. So they may decide to do a commercial mortgage on the whole portfolio.
Okay.
It can be for your general person that's... I tell you what, we have done a bit recently speaking to the commercial advisor that works for us. You know, people that start up like shops on Instagram and stuff.
Yeah.
Like doing clothes and that kind of stuff.
Yeah.
Them kind of people buying small units to start selling retail.
Yeah.
Doing a lot of them. Done a pub landlord recently. He's buying the pub that he's been the landlord of for 15, 20 years. We've done a guy he's buying a restaurant. We've had a dentist who wanted to set up a new surgery. So yeah, it's anyone that's got a limited company, essentially. You can do it in personal name as well, but it's mostly limited companies that wants to have a commercial premises.
Yeah.
Right.
So that you can trade from. Then there's also semi-commercial. So people that own like farmland, that's a working farm. So they also live there. So you'd have a residential mixed with the commercial. That's a semi-commercial mortgage. So that gets looked after by the commercial side. But yeah, I've got a lady called Rahila who looks after all that and she's really good.
Yeah,
Should be looking at you on this now going, no, Ant.
She give me a tenner.
Drop me name in.
I know, yeah.
It is interesting, definitely, with commercial. I think a lot of people are attracted to it because of landlord taxes that they're paying now. I think it's better from a tax point of view. But when we got into COVID and a lot of people started working from home and businesses changed 100%. A lot, I thought commercial property is going to fall off here, but it's definitely had a bit of a resurgence.
Yeah, it's as if, obviously, the tax incentives with it and the fact is I'm not... nothing to do with, I'm not financially trained or anything, but speak to your accountants and your financial advisors. But the tax kind of benefits that you get from investing in commercial property at the moment seems to be, we've had so many inquiries just about us managing commercial properties and helping people purchase commercial properties, just because that's the way. And it's what landlords are looking at the moment. If they do buy a commercial property and they put tenants in there and offer on an FRI lease, a fully repair and insure lease, then it's less for them to do as a landlord as well. So they're not worrying about keeping on top of the maintenance.
But you tend to get long-term tenants as well.
Yeah.
So if you buy a property develop it in a way that it'd rent out to a specific type of business, you're getting a tenant there for 5, 10, 15 years potentially.
Yeah, I think they have to pay as well to put it back to standard that they took it. As well, so you've not got that sort of worry with residential property as well. When I get it back, what conditions it going to be, and is this going to be dated and stuff as well? Because that is all taken care of by the contract. Yeah. Interesting.
Like commercial contracts are just so much different to obviously your standard AST. And a lot of the time landlords can then get within the lease the tenant to pay for legal costs and stuff as part of their onboarding type thing. So
okay, we just touched on actually getting commercial financing on residential property. Is the sort of what was the I can't believe I forgot the word there.
Yeah, so I think the semi-commercial.
Like me.
Yeah, but I'm sure I've seen people sort of having HMOs that they'd actually got commercial finance on. So residential property that they'd obviously run as a business.
Yeah.
And then getting commercial finance on it as well.
Landlords do get commercial finance.
It had to be sort of, there was a bottom price that you could do that on.
No, I'd be lying if I said I know the exact answers to that. What I do know is that Raheel looks after some landlords that decides to go down the commercial route.
Okay.
I believe it's because rather than doing it on like an individual unit basis, you can tie up your whole portfolio into one. I might be wrong there.
Yeah.
But based on the conversations I've had, I think that's why people sort of gravitate towards doing it that way, because they have the limited company already. So they can just do the limited company, the commercial finance on it instead.
Yeah. Okay.
Within the commercial, does that include bridging loans and stuff? So do you do a lot of bridging loans and things like that?
I know Raheel does. Sorry,
Sorry,
Raheel. Yeah, she's going to kill me for getting all this wrong,
She's going to be like, and she's going to have to come on next time so that she can correct everything.
Anthony said, forget it, because it was all wrong. No, to be fair, we had a client recently, so what his kind of game is that he buys old office blocks or old units, and then he gets bridging finance to develop it into single apartments or flats. So he done one recently, I believe it was somewhere over near Wigan, I think. But he converted an old office block into 26 flats.
Yeah.
Total cost was about 4 million. But once it was done, it was worth about 6.8.
Yeah.
So what he done is he'd used the bridge to do it all. And then once it was done, he then mortgaged them all onto a standard commercial mortgage, releasing out 75% roughly. So he gets the money back plus a bit more to put into his next investment.
I think when I've seen it, it's definitely a better vehicle to use in a development.
Definitely.
That is the only way you'd use it. And myself personally, I would say. Just touching more on your business there, sort of the growth that you've had really since you started in 2019.
Yep, it's June 2019.
Not every mortgage advisor does that. I'd say, obviously, we cover a lot of the same areas, and everyone I speak to, most people I'd say at the moment that are coming to us they've already been to see a mortgage advisor.
Yeah.
Sometimes you get people coming to see properties, they've not yet spoken to someone, but most of the moments have. A lot of the people say they're always using you, and I'm always happy to see it because I'm like, right, great.
Well known in the area.
Yeah, if the mortgages
it's with
in
the gym, that's right.
It's your Instagram lives. That's what it is.
Yeah. Is that where you've seen the most growth through social media?
Whether you like social media or not, it's here, innit, now. So
such a good tool for business.
That's it. So I'm 31 years of age. I kind of missed that. I'm a bit too old for that TikTok kind of thing, doing the pointing at the arrows and stuff.
I'm going to do one of them next week.
Yeah, I've tried. I've recorded about 1 million of them. There's some posted and they're staying on the gallery, them ones. But in terms of growth, as you know, we're from quite a close-knit town.
Yeah.
Word of mouth is the biggest thing that we've had that is really grown the business, as well as working with some really good estate agents like yourself. So when I started in June 2019, it was just me. Obviously, I'd done a couple of years as employed and decided I wanted to kind of go off on my own. And then June 2019, I was still living at home with my mum and dad, and I was working from my mum's coffee table. So laptop, phone, that was all I needed. From the first 6 months, I think a lot of people that have been self-employed will know that feeling. Did I do the right thing?
Yeah, I don't know, last year.
That first 6 months, man.
The stress.
Trying to find your place in the market. Stepping on people's toes, kind of, because they already have that space, really. It's hard.
Did you get that imposter syndrome?
I just didn't know where to. I didn't know where to start. I think when you first go self-employed, you try and do a million things at once, but then you don't stick to any of them.
No,
so you don't know which ones work.
Yeah,
you don't actually find what works for you. So
you have to be everything at once, don't you?
Thank you for saying that. Yeah. So I say to anyone that goes self-employed as a mortgage broker, right, you've been a mortgage broker for the past 2 or 3 years, and that was your only job. You might be the best mortgage broker in the world. That's fine. But being an actual broker is probably 30% of the job when you go self-employed.
Yeah, that's what I found when I started the lettings. I was my thing was lettings. I was good at lettings, and then when I started doing my own business, I was a marketer, I was a salesperson, I was, I dealt with all the insurances and I dealt with everything, and it's everything in between, then employment and everything else, and it just doing the actual lettings, which is the bit I enjoy and the bit I'm good at. I don't always. That's not what I only spend maybe 30% of my time on it.
30%.
Yeah,
it builds so much character. It built so much character. I've grew up loads in the last 5 years, 100%, and that's purely because I've kind of had to put myself out there. And like we just mentioned on social media, there, I don't post on my personal Facebook or Instagram. I don't post on any of that.
I'm the same.
Once a year for someone's birthday, maybe. So when I went self-employed, it was kind of I had to try and learn how to do all the artwork and speak in front of a camera and all that stuff. But that's the kind of generation now that we're appealing to.
We're talking to
100%.
Yeah.
So you've got to get either with it or not. And there's still obviously a few people that do it the old-fashioned way, and they do really well because that's their demographic. But if I'm going to appeal to 21 to 36-year-olds, they're all on Instagram, they're all on Facebook, they're all on Twitter, they're all on TikTok.
Yeah.
So you've got to be on it as well. And I think as well, it's the thing with mortgage brokers that people need to understand is the vast majority of us can get the same deals.
Yeah.
Regardless of what you read, we're all pretty much got access to the same lenders. So when you're going out and finding a broker, you need to find someone that you can trust, and because you're going to be dealing with them for the next 4 months. Me as a broker will know a lot about you. I'll see your bank statements, I'll see your pay slips, I'll get to know you, I'll get to know your family in terms of what you want to do. We'll do the budget planning together. I'll know what you like to spend your money on and what you like to go on holiday. You want to be able to share all that stuff with somebody that you get on with.
Yeah.
Yeah, I think when you've got a client for so long, like we have, your relationships with clients are slightly less because it's literally doing the viewings and moving them and stuff. I'm more tenants than landlord. You're the other landlord for a long time. But when we've got a buyer or seller, you're intensely in their life for 3, 4, 5 months.
Well, it's even longer though if you think about it, because if I've done a good enough job for them the first time,
they'll come back.
They're going to see me again in 2 to 5 years. So the way I see it is anyone that's came to me for their first mortgage or their second mortgage, whatever it might be, they're probably going to be a client for the next 25 to 35 years because I'm not going anywhere.
Yeah.
So they're going to be coming back to me. So who knows? I might know some of these people till I'm well into my 50s.
Yeah, the relationship that you get with them is so crazy. Like I've literally got one family at the moment where I've sold one of the houses and now the brother I'm selling for him, and then next month I'm putting 2 of the sisters' houses on. So I feel like I'm going to be around that.
I got more presents at Christmas off my clients than I did off my missus. Courtney's going to kill me for saying that. But it did.
Yeah.
The amount of hampers I got off clients was amazing. Do you know what I mean? And it's so nice because buying a house is such a big thing.
Yeah.
And when they move in, I don't expect them to be thinking about me. But some of them still do. And they really reach out and say, thank you so much. Like, you've been amazing. And that, I think it's important to have a job that gives you them highs.
Yeah.
It's very easy to have a job that is every day's a Monday. You know what I mean? There's no highs, no lows.
Property is it's such an emotional thing as
100%.
well.
You feel like you're doing it with them. Do you know what I mean?
Yeah.
When you get that call on a Friday, we're getting our keys today. You feel amazing.
Yeah.
Moving in every week.
Yeah, mate, I love it. I look forward to Fridays because I know people are going to be moving into their houses. And you probably see in my face now. I genuinely get up for it.
I think that's the thing as well. When you're self-employed, you sort of pick what clients you've got on. Like I've not had a client now for 18 months where I've been like, oh, I'm glad that one's done, and I've not got to deal with them. The relationship's so good that you can have.
They're not clients, like mates, aren't they? At certain points.
Yeah, but I think that's because we're very similar in we put our sort of personal brand into our businesses as well.
Yeah.
So it's not, you're not dealing with this company, you're dealing with Anthony, you're dealing with Cam, you're dealing with Cheryl. And like just when you were touching then on gift giving, I've had so much more gifts now on my personal brand
100%.
than when I was working in an IT agency and dealing with so many more sellers.
Yeah, definitely.
So I think that's where it comes from, having that personal brand is personal connection.
Yeah.
And it's personal to us as well, I suppose, because it's our business. And they're the clients.
You win together, lose together, don't you?
Exactly.
And it's only coming back to you, really.
Yeah. And they're going to be going out and shouting about what a great service that they've had from us. So that's what you want, so that they're getting your
this sort of past 18 months, I've done well in terms of I've only had to reduce one asking price. But when I've done it, I felt like I had to let them down so much because you've got that personal connection.
I take every client I see, I take everything I do for them personally. And I can guarantee there won't be any of my clients out there that will say that's not true. There's nothing better than someone coming to you going, look, we've spoke to another broker or we've been to the bank and they've said, no, we can't get a mortgage. And then you getting them a mortgage and doing it quite quickly as well. It's a good feel.
Yeah, definitely.
Do you know what I mean? It's a really good feel. So yeah, there's plenty of people that come to our office that have had sort of bad credit, down on the luck, and they kind of think, right, we're just coming to see you because we want to see if it's possible. And an hour later they're leaving with an agreement in principle. And
their lives has just changed to how it was last week.
There's been loads though, and even now 5 years on, I still get that same buzz of ringing someone up and going, I've got you a deal. And they're going, no, you haven't. So I have, and it's only 0.2 above a high street rate. So that's not for everyone, by the way. Some people are higher rates, but yeah, it's really good knowing, like I say, we all have access to the same banks, a lot of us, but a lot of it is sort of problem solving. So knowing different lenders' criteria and sort of placing the right client with the right lender. And that's very important that you get a broker that knows how to do that. Because it could be the difference in thousands of pounds.
I suppose being very proactive as well as a broker is important, I suppose. Would you agree?
Oh, 100%. I think being self-employed, you'll know, you do feel like you're very reactive at times because you don't know what's going to happen. I could wake up in the morning and I could have had 2 clients have down valuations. Instantly they go back into the diary and you become reactive. But if you're going to be proactive and kind of foresee what's going to happen moving forward with any particular clients and sort of setting up that, it makes everyone's life a lot easier. I think the main thing though as well, going back to that, communication's massive.
I agree.
Clients aren't hard to deal with as long as you give them what they expect. So if you can set boundaries from the beginning and set expectations and say, look, I'll ring you even if there's not an update. I'm going to apply for these 2 lenders today. I'll be done about 4:00. Even if they're both no's, I'm still going to call you. And you ring them at 4 like you promised. People love that.
Even if there's no news.
Yeah, and that's what you don't get when you go direct to like a high street bank. You've literally got someone who's putting countless applications through constantly that knows you as Mr. and Mrs. or whatever.
But think about it, if you go to see your bank, they're only going to show you 2 or 3 products. You're going to sit there for 2 hours. They're going to show you probably a 2-year fix, 5-year fix, whatever it might be. They might show you 2 or 3 products. You've been with them for 2 hours. You come and see a broker, you'll be with them for an hour and a half for free most of the time. And you'll see thousands of products from all different banks, some you wouldn't have even heard of, but will be very competitive. Let's be fair, it's not like I'm having to preach to people to come in because most people do go and see brokers nowadays, which I think is really good.
Definitely.
Especially if you're going to be committing to something.
It's
like
literally, imagine just going direct to the person that is trying to sell you something. It's not, and that is what happens, unfortunately, for a lot of people. So they don't get the deal that's best for them. You do shop around.
What happens every year when your car insurance is up for renewal? You shop around.
Go compare.
You know what I mean?
Compare, I was just going to say.
Yeah, and that's for car insurance for 20 grand car on the drive. You're about to buy a house for hundreds of thousands of pounds. Why would you not compare?
Definitely. Especially when there's so many products on at the moment.
Definitely. Yeah,
and constantly changing. We just touched then. So you started from your mum's kitchen table.
Oh yeah.
Where are we at? Now?
Bit of a tangent there. Sorry, so back to that. Yeah, mum's kitchen.
We went well off then, didn't we?
I just want to sort of see where we've got from and where we are now, because obviously I know you've got the team, your new office is great. I've not been out to it, I've only seen the pictures. I know you're old office.
So after a year, I got to a point where I was turning clients away. It's not that I was turning them away. I was saying to them, look, you're going to have to wait a week or 2 to get in to see me, and that's not good. The old point of come to see a broker is we can be a lot faster than the banks. So at that point, started bringing people on. That was 2020. That was obviously during COVID. But now 2024, there's me, 6 other brokers that have been intentionally brought on to be at different points around the Northwest and one a bit further down south. So we're not all stepping on each other's toes, but we have a good coverage of sort of Liverpool, Crosby, over towards Blackburn, Darwin, Preston. We kind of have a nice little area on the Northwest. And then we have Adifa, who's an absolute golden nugget of an administrator who gets a lot of cases over the line when they probably shouldn't do.
Yeah, that's what I always say to people when they're like, well, we're speaking to brokers, but and I say speak to Anthony, because literally once that application's gone in, he's literally have a staff member that is just there to chase everyone, because the banks don't go, we've done this, we'll let the client know.
Yeah,
Adifa's just chasing.
Adifa's been worth a weight in gold, and there'll be a lot of clients that can vouch for that. There's been some where banks have declined it for very silly reasons. And whereas a lot of people would just go, well, I've been declined, let's try somewhere else. And Adifa's on the phone to the BDM.
Yeah, people don't realise how valuable
why have
that
you declined this and that? And half an hour later, I've got an offer in my inbox.
Yeah.
So you want people fighting your corner.
Yeah, that's 100%. Something people don't look at the beginning, is it? And it's so important. Like getting an offer accepted or putting an application in, sometimes the easiest.
Yeah.
Going through that legal process and that conveyancing and everything that comes from that is the hard part of buying a house.
I think it can be quite easily forgotten by people in my industry that we're getting people in that literally don't have a clue.
Yeah.
So what might be obvious to us isn't obvious to them.
Yeah.
So it's all about just starting from the very beginning. Some people, you need to tell them what a mortgage is, and that's fine.
Yeah.
You're not expected to know. You're a first-time buyer. So what is a mortgage? What is a fixed rate? What is a variable? What's
available to you?
Well, yeah, and like I said to you at the very beginning of the conversation we're having, it's kind of it's not a one size fits all. So what we can do is find out what is a comfortable budget for you, a comfortable purchase price. What is the best type of rate for you? Is it fixed? Is it variable? Is it 2-year fixed? Is it 5? So it's about finding what is right for you, and not everyone's the same.
Yeah, no, definitely, I'd agree.
So, Ant, have you got a crystal ball? Where do you see rates going over the next 12 months?
Okay. So if I was to... Right. It's a tough one.
No pressure.
So many people like this.
I know what's going to happen.
Come on, Ant.
I'm going to get a message in 6 months of someone going, you said...
This is a disclaimer. Ant can't see the future.
I don't know what's going to happen. Okay, so based on what people are saying, the people in the know, I think what you'll find over the next 3 to 6 months is stability. And that's what the market's crying out for.
Yeah.
Volatile rates is not good for no one.
No.
At the moment, it's going up. I mean, don't get me wrong, the last couple of months, the last couple of weeks, should I say, it's been pretty it's been pretty secure. Bank of England, as of the day that we're recording this, has confirmed that the base rate's staying at 5.25. That happened about 20 minutes before we came in here, which is good. That means that it stayed the same for 4 months. 4 consecutive times, it stayed at 5.25, which gives a bit of confidence in the market, hopefully. So, crystal ball, as long as nothing drastically bad happens, like another war or something terrible.
Or another Liz Truss.
Yeah, another quasi-budget. Unless nothing terrible happens, I think for the next 6 months, things will stay pretty much the same, with the look at things starting to come down slowly towards the back end of the year. But also, I reckon house prices might drop a little bit. A little bit. What do you think about that?
See, it's so interesting.
Being an estate agent.
It's something that you always hear. Yeah. Like I remember literally I've been in this now for 5 years, and literally remember my first negotiation back then, and people were like, yeah, I'm waiting for it to crash. And I'm like, still not crashed. Like I'm still valuing houses higher than I was last year and the year before. It is still standardly going up.
The issue you've got is the artificial market that we had the last couple of years.
Yeah,
so
definitely.
Was it 2022 house prices in Skem shot up 12%?
Yeah,
in the time
something ridiculous.
Literally 12% in a year. Now they've dropped down 4% since then, and certain banks reckon it'll drop another 4% in the next 12 months, which takes us back to roughly where we were 18 months ago.
So we're still on an upward trajectory. That's a hard word to say.
Yeah.
We're still on an upward kind of curve, aren't we? Because because of the artificial boom that we had.
Yeah. It was to stimulate the market.
Yeah.
That's so after COVID, we needed to stimulate the market. So rates dropped through the floor.
Yeah.
Which was amazing for some people, but it also meant house prices shot through the roof. Whereas now hopefully we're getting to that place where things make sense.
Yeah.
Yeah. As you can imagine, I constantly get that question. How's the market? What's it doing? But I would literally just say, house prices are steadily...
Is it a good time to buy? Is it a good time to sit?
Well, that one all the time.
Is it a buyer's market? Is it a seller's market?
Well, what is your situation? What you're looking for? Where you're looking? It's always that, but house prices have steadily increased as they normally would anyway.
Yeah.
The only thing I would say is the lack of intensity in the market, and that is because not as many people are appeal to buying because the financing isn't as cheap as it was the last 2 years.
People coming in our office, I think the issue we're having is they are buying, but very quickly.
They get an agreement in principle. Decisions.
They get an agreement in principle on a Monday, and by Thursday they found the house they want to buy. So there's not like an active pool of buyers. They seem to be getting qualified.
Yeah, that's exactly what I was alluding to. Like I think my last sale last week, when we were negotiating, and they were like, "What do you think we can get higher?" And I'm like, "Look, we are one of 65 options in a very small town.
Yeah.
This is a very good offer. Let's take it." So I'd agree with you on that one.
Yeah,
but yeah, I would agree that everyone is looking at the market saying these rates are going to fall down.
Yeah.
But that's not how it works.
Can I just say as well, though, if you're expecting rates to fall to the point they were 2 years ago,
they never will.
No.
Dream on.
No, never ever.
I told everyone.
It's not going to, unless again, something like another pandemic happens.
But even if it did, that would stimulate the market the wrong way, was it? So was it...
it comes in
that
peaks and
false
troughs,
market
doesn't it?
again, what we talked about.
It comes in peaks and troughs. I mean, you don't want really high house prices with really low rates and the vice and
vice
the
versa.
opposite.
You want a stable market.
You want it to make sense.
Yeah.
You want it to make sense that people on decent salaries or average salaries can afford average houses. And it just needs to be right across the board.
Yeah.
Not people getting 7% rates on 260 grand houses that were worth 220 the year before. Do you know what I mean? It just needs to make sense.
Yep.
Yeah, Ant, I think we've given the viewers today plenty of knowledge to go away from. If you are in the mortgage market, do reach out to Anthony and his team. And do you want to just let people know how they can find you and contact you?
Yeah, so Facebook, Instagram, and the website. So it's Facebook and Instagram is Fylnn and Co Mortgages, and then the website is flynnandco.co.uk.
Fabulous. Thank you very much.
You're welcome. Thank you.
Join us next time where we'll have more guests on talking all things property.